Welcome to the CDFI Fund's monthly CDFI certification webinar. Today, we're going to be focusing on customized investment areas. Let's begin by reviewing the foundational target market requirements for CDFI certification. To qualify as certified CDFI, an organization must serve at least one eligible target market through its financing activity in that proposed market. Additionally, at least 60% of both number and dollar volume of arm's length on-balance sheet financial products must be directed towards one or more eligible target market components. This is confirmed annually through the transaction level report, or TLR. We're starting with these requirements because how an organization meets them depends on the type of activity it offers, as well as which target market components it's proposing to serve. These nuances will be addressed throughout this presentation, but I want to keep in mind that much of what we cover today will tie back to this foundational requirement. We're going to provide an overview of investment areas. In the last section of the presentation, we emphasized the foundational requirements that CDFIs must serve an eligible target market with their own financing activity. Now let's review the current types of eligible target market components. The CDFI fund currently recognizes two broad categories of target markets. We have investment areas and targeted populations. These targeted populations include specific demographic groups, low-income individuals, and certified CDFIs, while the investment areas are geographic-based. To summarize, investment areas, they relate to geographies, while targeted populations focus on specific groups of people. Today's presentation will focus on the investment area components of the target market, specifically on customized investment areas and non-metro customized investment areas. An investment area is a U.S. geography that meets at least one of the following economic distress criteria. A census tract or a geographic unit would have a poverty rate greater than 20%, a family median income at or below 80% of specific benchmarks, an unemployment rate 1.5 times the national average, a county population loss greater than or equal to 10% between the two most recent census periods for metro areas, or greater than or equal to 5% over the last 5 years for non-metro areas. Or the unit is located within an empowerment zone or enterprise community as designated under Section 1391 of the Internal Revenue Code of 1986. Please note, these criteria differ from the standards used for the Bank Enterprise Rewards Qualified Distressed Community term. Let's talk now of investment area geographies. There are three types of investment area geographies, or investment area target market components, which are by default geographies because these are geographic-based target market components. We have pre-qualified investment areas, customized investment areas, and non-metro customized investment areas. And we'll explore the geographic eligibility and distinction of each type of these components in the next coming slides. A pre-qualified investment area is a geographic-based target market where each individual census tract has already been qualified by the CDFI fund as meeting at least one economic distress criterion. These are the criteria that I explained in the previous section of this presentation. This type is available for any organization, regardless of whether it operates locally or nationally, and is strictly limited to census tracts, not counties, parishes, or states. It is designed to capture eligible financing activity directed to these pre-approved tracts across the United States and its territories. A customized investment area is another geographic-based target market type. Unlike pre-qualified investment areas, customized investment areas may include a mix of census tracts where some meet the economic distress criteria and some do not. To qualify as a customized investment area, a geography must be comprised of contiguous census tracts, and at least 85% of the population within that geography must reside within qualified census tracts. These qualified census tracts, I want to point out, this is referring to census tracts that qualified as economic distress based on the aforementioned criteria. It's important to note that a customized investment area may include a mix of metropolitan or non-metropolitan tracts. In the CDFI Fund's mapping tool, CIMS can be used to validate customized investment areas on these criteria. When a customized investment area is designated as a target market, only financing activity within those defined boundaries may count towards that target market component. Additional activity requirements must be meant to include the customized investment area activity in the 60% target market activity test. We'll review those details in the next section. Let's now talk about non-metro customized investment areas. Another geographic-based target market type that can be made up of either qualified tracts or qualified units, as well as non-qualified units. I should point out that the difference between a non-metro customized, or one of the differences between a non-metro customized investment area and a customized investment area is that all of the units within the geography must be designated as non-metro. Whether it's tracts, parishes, or counties, this means that these units do not qualify as a metropolitan statistical area, i.e. lacking an urbanized core of 50,000 plus people, and its integrated adjacent areas, as defined by the Office of Management and Budget. These other key requirements include that the geographic units for a non-metro customized investment area must be contiguous, either if it's at the census tract level or at the county or parish level. At least 85% of the population within that geography must reside within qualified units of that geography. Here I want to peel back some more information. If the non-metro customized investment area is comprised of census tracts, this means that 85% of the population must reside in qualified census tracts within that geography. If the investment area is comprised of non-metro counties or parishes, then that means 85% of the population must reside in counties or parishes that qualify as an investment area as a whole. As with customized investment areas, only financing within that non-metro customized investment area boundary can be counted for the purposes of the target market test. We'll review the specific activity requirements in the next section of this presentation. I wanted to provide a slide of all of the geographic-based requirements for investment area geography. A few key notes on investment area geographies. CDFIs may be approved to serve multiple investment area types at the same time. If an organization has more than one customized investment area in its target market, the geographies must not overlap. A census tract in one customized investment area cannot appear in another customized investment area. To validate the customized investment area maps in CIMS and to report activity as investment area directed in the transaction level report, a geography must be captured at the census tract level, even if the area itself is comprised of counties or parishes. We're going to get into that a little bit more later. Let's talk now about the financing activity threshold for customized investment areas. As mentioned earlier, CDFIs must direct at least 60% of their overall financing activity to their proposed target market components. However, when using a customized or non-metro customized investment area, there are additional activity level requirements in order to count financing directed towards non-qualified census tracts to the target market activity benchmark. In the following slides, we'll explain these activity thresholds, show how organizations can meet them for both customized investment areas and non-metro customized investment area types, and review relevant rules for including those components in the target market assessment. Well, we got a sneak peek on the next slide. To count financing activities, or any financing activity as directed towards a customized investment area, at least 85% of that customized investment area activity, measured by both number and dollar volume of transactions, must be within qualified census tracts of the customized investment area. We have this graphic that shows, like, of all the activity directed towards customized investment area geographies, 85% must be directed towards the qualified census tracts for them all to count. And that is our next point. If this 85% threshold is met, then the remaining 15% of the activity in non-qualifying tracts within the geography can also be counted for the 60% target market benchmark. This 85% threshold ensures that CDFIs serving a customized investment area still direct the vast majority of their activity to economically distressed areas. Let's walk through an example. Suppose a CDFI directs 60% of its overall financing towards a single customized investment area. As long as the 85% threshold is met, or as long as 85% of that customized investment area directed activity is within qualified census tracts, the remaining 15% within non-qualified census tracts may also count towards the 60% target market benchmark. If a CDFI's target market is comprised of only customized investment area and it has no additional qualifying activities, for instance, nothing directed towards a pre-qualified investment area outside of the customized investment area geography or towards a targeted population, then the math requires at least 51% of the CDFI's total activity to be directed to qualified tracts. That's because 85% of the qualified census tract activity within the customized investment area, so the chart on the right, multiplied by the 60% of the overall activity that is directed towards the target market component, the chart towards the left, then multiplied, that would equal 51% of activity being directed towards qualified census tracts. So what happens if an 85% customized investment area activity threshold is not met? The activity directed to non-qualified tracts within the customized investment area will not count towards the 60% target market benchmark. While activity directed to qualified census tracts within that customized investment area can still count, but only as part of an investment area pre-qualified target market component. Because of this, the CDFI fund recommends that any organization proposing a customized investment area should also designate investment area pre-qualified components within their target market. This ensures that at least some of the customized investment area directed activity can still count towards that 85% threshold, even or it can still count towards the target market benchmark assessment, even if that 85% threshold is not met. Let's look at an example involving a CDFI with multiple target market components. In this example, the organization directs 20% of its activity to an investment area pre-qualified component. That's any qualified census tract in the US or its territories, 50% to a customized investment area, and 10% to a low-income targeted population component. We'll examine what happens if a customized investment area has not been, or the customized investment area threshold has not been met in this scenario. So we're saying that the organization did not meet the required 85% activity threshold when evaluating its activity directed towards a customized investment area geography. Let's say instead of meeting this 85% threshold, the organization only directed 60% of its customized investment area activity to qualified census tracts. Because of this, the activity in the non-qualified census tracts within the customized investment area cannot count towards a target market benchmark. The activity in the qualified census tract of the customized investment area can be redesignated as part of the investment area pre-qualified component and can be counted in the target market benchmark test. Again, here's an example of an organization that failed to meet that 85% activity threshold. So certain activity needed to be redesignated to eligible target market components. So in this case, despite not meeting that customized investment area threshold, the organization still meets the 60% target market benchmark thanks to its lending and other target market components outside of that customized investment area. 10% in this case to LITP, and now 50% to qualified or IA pre-qualified, because the activity that was directed towards qualified census tracts within the customized investment area is now redesignated as investment area pre-qualified. Now, I want to give a little clarification here. We've only presented activity in non-qualified, or we've presented activity in non-qualified tracts as non-target market. However, when completing their CDFI certification application materials, an organization could determine that some of these transactions could qualify for another market component to which they are accountable and therefore be redesignated. In that case, they will go into their TLR, redesignate those transactions to another qualifying target market component, and then they'll still be counted towards the 60% benchmark. In this case, we just kept it simple. Any of the customized investment area directed activity to non-qualified tracts were just going to be counted as non-target market component or non-target market directed. Let's talk about non-metro customized investment areas. So prior to October 1st, 2027, an applicant serving a non-metro customized investment area comprised of census tracts, counties, or parishes must direct at least 75% in number and dollar volume of transactions within qualified census tracts of that non-metro geography. If this 75% threshold is met, then activity in non-qualified tracts within the geography may count towards the 60% target market benchmark. Here's a graph to show how this threshold is operating. Beginning on October 1st, 2027, an applicant serving a non-metro customized investment area comprised of census tracts, counties, or parishes must direct at least 85% of its activity in both number and dollar volume to the qualified census tracts of that geography. So it works more similar to regular customized investment areas. Only then will the remaining activity in non-qualified tracts count towards the 60% target market benchmark. And here's a graphic to illustrate this requirement after October 1st, 2027. I want to stop here and make a couple notes about customized, non-metro customized investment areas. These target market components are comprised or can be comprised of counties or parishes, and they will still be eligible as investment area components. It's just that the investment area activity threshold for non-metro customized investment areas is always assessed at the census tract level. Any non-metro county or parishes, or county or parish, I should say, is fully comprised or must be fully comprised of non-metro census tracts. It's important to emphasize that the CDFI fund continues to allow non-metro customized investment areas to be made up of counties or parishes. It's just in order to count non-metro qualified, non-metro, non-qualified tracts towards that 60% target market benchmark, the organization must still meet the required percentage for the activity threshold. The 75% activity requirement for non-metro customized investment areas in effect prior to October 1st, 2027 ensures that applicants proposing such geographies still direct a majority of their financing to qualified non-metro tracts. This supports the CDFI fund's commitment to serving economically distressed communities, even in non-metro areas. Just like with the standard customized investment areas, when applying the revised certification policies, if an applicant directs 60% of its overall activity to a non-metro customized investment area, and at least 75% of that activity is within qualified census tracts of that geography, then an applicant can still meet the 60% benchmark requirements. This is a parallel structure to the customized investment area thresholds that we already discussed. It's just prior to October 1st, 2027, the activity threshold is slightly lower than for the general customized investment areas. So what happens if a non-metro customized investment area activity threshold is not met? Any activity directed to non-qualified census tracts within a non-metro customized investment area cannot be counted towards the 60% target market benchmark. However, activity directed to qualified census tracts within that non-metro customized investment area geography can still count if redesignated as part of the investment area pre-qualified target market component, which is why, again, CDFI funds strongly encourage organizations to when proposing a non-metro customized investment area, to also propose a pre-qualified investment area component. That way, if the threshold is not met for non-metro customized investment areas, qualified activity can still count towards the target market benchmark. Let's walk through another example involving multiple target market components. In this example, the organization is proposing 3 target market components. and 15% of its activity is directed towards an investment area pre-qualified component, which is directed towards census tracts that are qualified but outside of the non-metro customized investment area. Then we have 60% of its activity directed towards the non-metro customized investment area geography, and 15% of its activity directed towards other targeted population African American component. In this scenario, the organization did not meet the required 75% customized, non-metro customized investment area activity threshold. When reviewing the activity within the customized and non-metro customized investment area geography, less than 75% was directed to the qualified census tracts. Let's say, for instance, only 66% of the activity was directed towards qualified tracts. Because this 75% threshold was not met, activity in the non-qualified tracts cannot be counted, and activity in the qualified tracts must be redesignated as pre-qualified investment area activity in order to count towards the target market benchmark. This example organization meets the target market benchmark since the non-metro customized investment area activity was redesignated towards an investment area pre-qualified target market component, making 55% of the applicant's overall activity being directed towards investment area pre-qualified target market component, and still that remaining 15% directed towards an OTP African American target market component. Despite not meeting the activity threshold for the non-metro customized investment area, this entity is still meeting the overall target market benchmark requirements due to activity that qualifies in other components. Again, for simplicity, we took the non-metro customized investment area directed activity that was within non-qualified tracts and just counted that as non-target market in this case, but we're distinguishing it here in this graph as being counting towards the non-qualified census tracts, but then not being allowed to count towards the 60% benchmark. That's why you can see it in yellow here. To wrap up this section, let's go over several key items about the investment area activity thresholds. CDFIs may serve multiple customized investment areas and/or multiple non-metro customized investment areas. To qualify or to count all activity within an investment area, an organization must meet the relevant activity threshold for that investment area type. Depository institutions, such as banks or credit unions, may use financial services to meet the 60% target market benchmark. For both customized investment areas and non-metro customized investment areas, organization must meet the applicable activity threshold in order to in order for unique depository account holders in those geographies to count towards the benchmark. Each transaction reported in the TLR may count toward only one target market component, even if it qualifies for more than one. If activity thresholds are not met for an investment area type, but a transaction qualifies for another target market component, CDFIs should redesignate it in the TLR. For example, transactions in qualified tracts within a customized investment area or non-metro customized investment area may be redesignated as IA pre-qualified. Transactions in non-qualified tracts may be redesignated to another component, such as LITP or OIT and another targeted population, if that organization is accountable to that component. If a CDFI begins its TLR and later finds that it does not meet the activity threshold for including non-qualified tract activity within a customized investment area or non-metro customized investment area, it must return to the uncertified TLR and re-tag those transactions. You'll change those qualified tracts from, or you'll change those transactions in qualified tracts from IA customized to an IA pre-qualified. For transactions in the non-qualified tracks, maybe tagged as LITP or one of the OTP target market components based off of an approved target market assessment methodology method, or based off whether or not there is accountability on your organization's governing board or an advisory board. For regulated entities using consumer loans TLR or the consumer loans object within the TLR, there's a slightly different process. The number and dollar volume of the transactions must be removed from the investment area fields and added towards an LITP and OTP field, if applicable. I want to make a final point. The investment area activity thresholds are not the same as the target market activity benchmark. Oh, oopsie. My last point got disrupted. These activity thresholds for investment areas are not the same as the 60% target market activity benchmark. The activity thresholds apply only to specific investment area components. They determine whether or not non-qualified census tract activity within those geographies can be counted as target market directed. The 60% benchmark applies to an organization's overall activity, and it's a broader measure of whether a CDFI is serving target markets. Meeting the activity threshold enables more activity within a given geography to count, but meeting the benchmark is what determines whether or not the organization satisfies the CDFI certification requirements. Now let's talk about the CDFI certification application components when proposing a customized investment area. There are three components of the CDFI certification application that are relevant for CDFIs when customized investment areas or non-metro customized investment areas are proposed. First, as you see on the screen, are CDFI certification market records in AMIS. Next, the map. It's a map in the CDFI information mapping system, also known as SIMS, that conveys the customized investment area geography. And the last is the TLR submission and running a target market calculator, or TMC. Let's walk through how an organization would complete a customized investment area component, or complete the various components for proposing a customized investment area. Let's talk CDFI certification market records. Those are the records that are created in AMIS to represent a proposed target market component, and they follow a special naming convention. This is specifically important for entities that are proposing customized investment areas, and it's relevant to the target market calculator. The relevant data field is the market name data field on the CDFI certification market object. There are two aspects that build the CDFI certification market naming convention: the market type and the number. Both aspects of the record name should be separated by an underscore. Here, as you see on the screen next to format, is a written structure of the naming convention. And I provided a small example for non-metro customized investment area name. Let's walk through how to actually create these records in AMIS. Once logged into AMIS, go to the Related tab of an organization's profile. Under the New, in the CDFI certification market related list, you'll click that feature, or you'll click that new feature. I said that in a weird way, but you'll click this new button. When selecting new, you'll respond to the required fields and hit save at the bottom. Let's talk about the mapping of a customized investment area within SIMS. This component is only a requirement when an organization is proposing a customized investment area or non-metro customized investment area. For the purposes of the CDFI certification, the CDFI fund has fully transitioned to using 2016 through 2020 American Community Survey dataset when determining qualified investment area census tracts. In AMIS, each census tract that meets at least one of the criteria for economic distress, which qualifies it as an investment area, is highlighted in green. Here is what a cluster of qualified census tracts look like in SIMS. SIMS validates whether geographic units of a customized investment area or non-metro customized investment area are contiguous, as well as whether or not 85% of the geography's population resides in a qualified tract or qualified county, depending on the particular investment area type. I want to stop right here when we're talking about 85%. As a little recap, we talked about 85% twice in this presentation for two different in two different contexts. First one was related to the definition of or what defines an investment area geography, specifically for customized investment areas, where it's related to residents residing in or populations residing in qualified tracts or qualified counties. And here we're talking about that specific 85% requirement. We're not talking about the activity requirement. That's a slightly different thing. This is specifically talking about the geographic aspect. The name of each customized investment area map created in SIMS must match the name of the market name data field entered in on the CDFI certification market record in AMIS. If the names do not match exactly and the applicant has more than one customized investment area or multiples of the same type, then target market activity may not be correctly calculated, which affects whether or not an application can be submitted or approved, actually. An example, if organization ABC creates a market record name in AMIS called NMCIA_1, then that same name, NMCIA_1, must be used as the map name in SIMS. For customized investment areas, the maps of the relevant geography must be drawn at the census tract level. Here's a screenshot of what it looks like. There's a few specific pieces of information that are relevant for non-metro customized investment areas, since the investment area type can be comprised of either census tracts or non-metro counties and parishes. For non-metro customized investment areas comprised of census tracts, SIMS maps of the relevant geography must be drawn at the census tract level. And here is a screenshot of what that might look like. For non-metro customized investment areas comprised of counties or parishes, SIMS maps of the relevant geography may be comprised or may be drawn at the county and parish level, but all census tracts within the relevant counties or parish must be captured within the SIMS map too. in order to ensure that 85% of the population resides within qualified tracts. And then in order for the census tract data to be pulled into our target market calculator to assess that the applicant meets the activity threshold for that non-metro customized investment area. It's a lot of information for you, but here's an example of what a map looks like when it's drawn at the county level. And this is what it looks like when each census tract within that county level is drawn within the county. So you're essentially going to draw it at the county level and then also select the relevant layer to draw it every census tract within each applicable county is selected. Organizations must use the 2016 through 2020 ACS dataset provided by the CDFI fund to determine that each census tract is identified within the non-metro customized investment area geography as a non-metro census tract, or non-metro geographic unit, I should say. Now let's actually walk through how to create these maps in SIMS. Once logged in to AMIS, go to the Related tab and go down to Program Profiles, select the SIMS for CDFI Cert mapping tool. In SIMS, you'll select the Selections tab and the New Selections button to create a map. See how we're selecting its selections and then selecting new selections. From here, we'll be in map creation mode. Let's not look at what time I created this map. Select the Layer tab to ensure that you have census tracts that are the 2016 through 2020 census tract level for the AC. I'm saying this in a weird way. Let me back up and say, under the layer tool or the layer column, we're going to select the 2020 census tracts because that's essentially identifying to us the census tracts that are relevant towards the 2016 through 2020 American Community Survey. So that's what we're using now. If you select the county, then that's how you designate the county that as relevant to that 2020 ACS data. I should say also, so I don't know if this is clear, if an organization is proposing a non-metro customized investment area comprised of counties or parishes, they should be selecting both this county level layer as well as the 2020 census tract layer. And if you're just doing a customized investment area or a non-metro customized investment area that's comprised of units at the census tract level, you don't have to worry about selecting the county here. But anyway, so highlighted on the screen now, we're going to select this, this little circle with a plus in the middle. It'll drop down 3 options. And in order to add census tracts to your map, you're going to select this Add button. Then you'll be able to draw each of these units into your map. So you can use your cursor to select each of these units. Once you select that census tract, it will, or the geographic unit, if it's at the county level, it'll appear in yellow. Once finished with creating the customized investment area geography, go back to selections and hit save on the map. You can select these 3 dots to rename the map. And then in order to validate the map in SIMS to ensure its eligibility, select the 3 dots besides the map name. And then you can click Validate 2020 Target Market. What this is going to do, it's going to validate whether or not this geography is contiguous, as well as, or is comprised of contiguous units, as well as if 85% of the population resides in qualified units. I want to flag here for those listening, if you're trying to validate a non-metro customized investment area comprised of counties and parishes, please reach out to the CDFI Fund for assistance. And I also want to flag if you are proposing a geography for customized investment areas that might have two contiguous points at a corner or perhaps separated by a body of water, reach out to the CDFI Fund for assistance because you might hit a couple technical snags and we can help you sort that out. Here is what it looks like once you've validated it in SIMS. You'll have a report that indicates whether or not the units are contiguous. I did this at the tract level, census tract level, and I am indicating here that 85% of the total population is residing within qualified census tracts. Now, I want to highlight that the designated target market type is an important data point within the TLR that is related to customized investment areas. Let's walk through the TLR and TMC submission process. This is the transaction level report and the target market calculator process, if that wasn't clear. When using a manual/user interface method to individually upload your TLR, the designated target market field or target market type field should be here on the TLR manual upload page. You can see it. It's highlighted here on the screen. If an entity prefers to use the bulk upload method, then it's at this page that will provide organizations access to all of our templates. And the relevant template will be called New CDFI TLR Project, August 2020, and that's the full-length TLR. All the other templates or other that might be relevant are clearly labeled. And within this template, you'll find a designated target market type data point where you'll indicate that the transaction is directed towards either a customized investment area or another target market component. Once an entity has entered in all of their transactions into the TLR and its various components, the next step is to run the target market calculator to see if the entered transactions meet the target market thresholds to allow an entity to start the CDFI certification application. The target market calculator can be run as many times as an external user wants to run it. Target market calculator is found on the same page in AMIS where an entity accesses the templates for that bulk upload method. Once finished, a green screen, well, sometimes it could be red, I should say, but ideally for CDFI, the green screen will appear on your computer showing the results for the calculator. And the overall percentage rate, as well as the percentages for each target market component that was identified based on an entity's answer to that designated target market type data point, will be conveyed here on the target market calculator breakdown page. The green shading indicates pass, while the red shading indicates fail. Note for the consumer loan component known as the CLR for regulated entities with consumer loans, the calculator uses the answers of all of the different target market component fields. All right, so let's go through and recap some of the relevant information we covered today. For an investment area pre-qualified, there are geographic requirements. Any census tracts that qualify as an economic distress, or at least that meet the economic distress criteria as referenced in one of the previous sections, the first technical section, but within the first 10 minutes of this presentation. Any qualified census tracts within the United States is that investment area pre-qualified geography. For the activity requirements, it's any transaction directed towards that qualified census tract can be counted as eligible for the target market test. You'll have to create a CDFI certification market record in AMIS, and you'll have to use the designated target market type field in the TLR to have this run, have this transaction be counted in the target market test. For customized investment areas, these can be comprised of either a contiguous, or I should say, this can be comprised of a contiguous mix of qualified and non-qualified census tracts, but 85% of the population of that geography must reside in qualified census tracts. And when qualified census tract activity exceeds or equals 85% as directed towards this customized investment area geography, then all activity directed towards the customized investment area may be counted for the target market benchmark assessment. Here, you'll create a market record in AMIS, create a SIMS map for the geography, and then you'll also designate the target market type in the TLR. For non-metro customized investment areas, this can be comprised of a contiguous mix of qualified and non-qualified non-metro census tracts or non-metro counties and parishes. 85% of the population must reside in either qualified census tracts or qualified counties. Prior to 2027, when activity directed towards a non-metro customized investment area either meets or exceeds 75%, all that activity can be counted within all the activity directed towards the non-metro customized investment area can be counted for the target market benchmark assessment. Here, you'll create a market record in AMIS, a SIMS map to convey the geography, and you'll use the designated target market type in the TLR to indicate which transactions are directed towards the particular customized investment area. Let's leave off with some CDFI certification resources. If you have a question, please reach out via AMIS service request to the Office of Certification Policy and Evaluation. And if you have a question about ACR or TLR, you can send an email to our FS&R team or submit a service request. We will be holding an upcoming webinar on relevant affiliates for the CDFI certification on July 24th, 2025. Thank you so much for joining today. I hope everyone has a great day. Thanks so much for listening. I know this was a long presentation.